Arvind Sangur is managing partner at Geosphere Capital. He's with us now. Arvind, good morning. Great to have you with us here. Appreciate it. Just a quick word, Arvind, on pharma specifically. Would you agree? I don't know if you heard some of what we were saying earlier. I was saying 12 to 18 months out, these pharma tariffs on foreign-made pharma products. I mean, that is almost going to be in the second half or the last 1 year of Trump's term. So from a market standpoint, I mean, actually, it's not bad at all.
Well, I guess it is okay. It depends on the timing. It depends on the magnitude. And whether the next president will completely roll it back after Trump is gone. So, I suspect there might be a bit of a relief, but I think the overhang of the uncertainty is still there. So, I think some of the more extreme measures, as we've seen before, are unlikely to come to pass. So I think it's going to be a mixed bag. I'm certainly not rushing out to buy pharma names on this news, but some bottom fishing could happen, I suspect.
Arvind, hi, good morning. On India, now, there's just so much going on with trade, right? It seems there'll be a deal. He's called it out. Or we don't have a sign of it just yet. There are sticky issues, and India is also taking the US to the WTO on several parameters. And then there's this pharma threat hanging. From the market standpoint, what should we read through and what should we take along? Because the market has gotten very quiet in the last few sessions.
Well, my sense is the market may be waiting for some trade news, but as we see the other markets, whether it was Japan or it was Korea or anybody else, the tariff news from a day ago didn't cause a huge, disruption in those markets. So my sense is, at this point, tariffs are kind of part of the fabric of the noise in the market, and they will affect some short-term moves. I think the problem, in my opinion, in the Indian market is all of our, indicators like four-wheeler sales, two-wheeler sales, CV sales. Every high-frequency indicator is showing a really slow economic outlook. So the earnings that is upon us, I think the market is as much waiting with bated breath on what's coming from there as assuming it's all about tariffs. So I think there's a fundamental side of the India growth story, which has nothing to do with tariffs, which is also not firing on all cylinders. So that may be part of the reason why the market is having a hard time, getting any momentum going.
Well, that's interesting because a lot of the, people who watch the market are saying that maybe things are turning, and from here on, growth engines will begin to fire, especially on the consumption front. But, be that as it may, what would your strategy then be in terms of allocation to the Indian markets, if at all? What would be the places where you think would be, fairly safe to hide?
Well, that's an interesting question. I think, we've been using a much more bottom-up approach in financials. I think clearly, the RBI has been quite supportive and with everything they've done to ease liquidity. Clearly, the financials can be, interesting, and I think that's an area that we definitely like some special situations which have lagged and have valuation support. But other than that, I would say it's more selective rather than any big theme. We certainly, I will say this, we're staying away from IT because of the headwinds of, the technology risks from AI, although, stocks, again, the growth has not been anything to write home about. And valuations are not really compelling. But, there may be a trading play there. But our preference is companies that benefit from what's going on in the gold market long term. That is a theme that we like. But we like companies that have more domestic consumption exposure, like you said. That's an area that we think is in better shape. Although, again, as I said, we've been a little disappointed by some of the higher value items like autos and CVs. But other parts of the consumption story may be a little better position.
Okay. So maybe discretionary consumption, that's the one thing that's worked in the Indian market for the past many quarters. Arvind, but overall, just to go back to just the way the US market has taken all of it in its stride as well, Numbers are still good. I mean, the macro numbers are still good. So what? More upsides? At least with the US market, you think?
Well, I think the US market has been amazingly resilient, and the US economy has been amazingly resilient in the face of all the tariff news. There are some who believe that the lagged effect of some of these tariffs is going to start showing up in the next couple of months. But I think that this is a market which clearly seems to be more bullish oriented, and we are cautious, but not maybe we've been too cautious. And I think the market itself, till we see signs of economic damage or inflation rearing up, I think the U.S. market and the U.S. economy seems to be on surprising good footing. And frankly, the U.S. is in great shape from a technology standpoint, from an energy leadership standpoint. So those are all tailwinds for the economy. But the tariff noise at some point, it could create headwinds. But amazingly, from Liberation Day of early April, so far it has not shown up in the economic data.
Anant, we'll leave it there. Thank you very much for joining us. Great speaking with you. It's a pleasure having you here on CNBC TV 18 and this program.